Hey, it's Jack. Tuesday morning. What a great day to trade today is. Really, just really loving how these options are trading. But let me back up for a second. Yesterday I was talking about earnings, and we had some earnings today, and I just want to illuminate how crazy earnings can be. Okay, so I was telling you Bank of America was going to report earnings, and they're one of those traditional banks that gouge their customers with fees, and they make all their money on fees. Then you have the other kind of banks like Goldman Sachs and Morgan Stanley, where their revenue is not based on gouging consumers. They don't have a retail bank. Their banking business is mergers and acquisitions, IPOs, bond offerings, stuff like that. And that's really not happening. We haven't seen any IPOs. Like I was mentioning earlier, the investors really don't have an appetite for IPOs right now in this kind of a market. But here's the strangest thing, okay? Now, if you look at Bank of America's earnings, they were good. I don't know what the actual earnings were, but the stock was up on good earnings. That's normal. But sometimes a stock will have good earnings and the stock will go down quite a bit. Or the other case is the stock will have bad earnings and the stock will go up. Makes no sense. Take a look at Morgan Stanley today. They missed earnings by a mile. Yeah, the stock's up almost 5%. It was up 4.9% when I walked out here to make this video. So, how is it that a stock can have good earnings and go down, or a stock can have bad earnings and go up? Here's why. The guys that are really, really, really into this, they pay attention to what's called guidance, right? Now, the earnings is a number that just comes out, but the guidance is the stuff that comes out of the guy's mouth when they're announcing the earnings. So that guidance kind of gives them a forward look at where the business is at. And that's really what is driving these earnings. It's not so much what the earnings actually is itself, but it's the guidance. It's what they're saying about the earnings and what they're alluding to in the future. Now, when you have a big move, either way, up or down, it causes options prices to go up because the stock becomes more volatile. And the real money right now in this market is being an option seller. That's the best tip I can give you right now. That's where the money's at. This morning, I put on 2 trades, income trades on volatile stocks that have high priced options. That's my main thing. That's my bread and butter. That's what I love doing. It's way less risky than trying to predict which way a stock is going to go because you don't know what the earnings are going to be or what the guidance is going to be or any of that stuff, right? This is way simpler, way more profitable. Something I think you ought to check out is how to sell options and make income. That's where it's at right now, my friend.